Hello everyone and welcome to the Investment Club first video. So in the first half of this video I was really hoping to touch on just the basics of investing, someone completely new to it, what it is, how it's done, etc. And then in the second half of the video I was going to show you the specific tools that I was hoping to use throughout the year in the Investment Club. Now, if you're not new to investing, I sort of recommend you still stick around just because I might cover something you haven't heard of yet, or it's still good review. And again, in the second half of the video, I really recommend everyone just pays really close attention to, where I'm going, just the websites, just, again, the whole reason I do the screen captures so you can, on your computers, very effortlessly see, oh, this is where I should be going, this is what I should be typing, etc. So, without further ado, I guess the best way to start talking about investing is just to give a very broad meaning of it. And the broadest meaning of investing is just we're going to purchase ownership in something, expecting some cash flow later. So, again, very broad definition. Technically, when you go out and you say buy a computer, you purchase the computer, you own the computer, and then in the future, you're hoping to be able to sell it back for some cash. Now, most technology and most consumer goods generally depreciate in value instead of appreciate in value, and you're not really expecting to turn a profit off of it. So, quotably, when we use investing, we're trying to say, hey, we actually want to turn a profit. But, again, as anyone knows, that's not always the case. People mess up. Unfortunately, people don't always invest in things that appreciate in value. So the main outlets that, again, quotably for finance investing we use are stocks, bonds, and private equity. So those three things together make up most of what people talk about. A stock just means you pay you pay on a stock market, or if it's the initial public offering, a company says initially, hey, I want to sell essentially pieces of myself. So, a company like Google a while ago said, we're a good company, we're getting bigger, except, hey, we think it would be really helpful if we just bring in investors and they give us a ton of money and then we use that money that's essentially, almost, there are expectations that come with it, but no immediate, you have to have some liability attached to having an IPO. So, Google said, hey, we want to bring in a ton of investors, so we're going to sell pieces of our company. And that's what a stock is. It's a little piece of an ownership of a company. So if you bought all of the shares of Google, you would effectively own Google. You would be able to make decisions on how the company is run. Now, most, shareholders don't have the time to go through every single little thing of a company. It's inefficient. So what a lot of shareholders do is their main things that they vote on are very general, basic strategies, if not just, hey, we want to vote on who will be on the board of directors, which is essentially a CEO's boss. Again, a stock is a ownership of a company, and you do have voting rights for the most part with stock. Not all stock, but for most stock, you actually have voting rights, and you actually get to decide actually how the company runs. The next is bonds or any type of debt, which is saying I'll loan someone money and in return I'll get interest. Very basic. Leases are essentially a type of bond and everything like that. And then there's private equity, which is just saying you're going to invest in a company that isn't publicly traded. So again, I said, Google said, hey, I want to sell pieces of myself, and I'm going to do so in a public manner on a stock market. Anyone who has the money can buy and own a little tiny piece of Google. Private equity, as the name suggests, is just like that, a lot more private. It's a company that isn't sold on the stock market, but you could still, if you go up to the owners or make a deal, you could say, hey, I know you're not, open for market on sale, a company, you're not on an open market, but hey, I think I'd like to invest and own part of your company. And normally private equity isn't like individuals like you or me. It's huge firms with tons of money that go in and buy parts, if not all of a company. Now, as it probably suggests, with the investment club, we don't have the resources or the wherewithal to do private equity. And then also, although most real life portfolios have a good mix of stocks and bonds, what the investment club primarily cares about is stocks. So we're actually going to focus exclusively on stocks. So again, a stock is just a tiny ownership of a company that's sold on a stock market. And this market acts very, I guess, I'll get a little bit poetically here. It's the last true market pretty much in the world. It's or the closest to a very efficient market. So in economics, you learn, a market is where buyers are matched with sellers, and based off of supply and demand, we get a price. And all these goods or these stocks in this stock market are analyzed. A lot of information is known about them. A lot of people are acting very rationally, or at least we would hope. And it all comes together, and you get a market of prices and buyers and sellers. So again, when a company initially decides to sell its stock, it makes it's called an initial public offering on a stock market. And then after that, it's just, again, out there in a marketplace. So, when Google initially sold stock, they got a huge sum of money. But now when, shares of Google are bought and sold, Google doesn't get any money just because it's between, for the most part, private buyers and sellers. And if you want to figure out the very basics of a company, I think, I like just looking at Google Finance, and we search by what's called a ticker symbol. So Google's ticker symbol is just GOOG. And, that's just essentially a code we give to any stock to figure out, or have a nice way of saying, this is what this is. And so if you ever have a company, let's say you wanted to know Ford's ticker symbol, just do a quick Google search, Ford, ticker symbol, and it comes up, it's F. And all this stuff next to it means is, you see NASDAQ here, over there you saw NYSE. That's just the stock exchange it's sold on. So as you can imagine, it's a marketplace, which means there's not only one location to buy and sell things. Same thing with stocks. In the United States, there's the New York Stock Exchange, and then there's also NASDAQ. There's exchanges all around the world. So the question, and again, so you just figure out the ticker symbol, and you look at the company and you figure out what a price is based on the market, and then you can say, yes, I want to do that. Go to any type of service that allows you to buy and sell stocks, and boom, you're an owner of a share of a company, and you're hoping that the company will either appreciate in value or maybe pay off in cash flows and dividends. Now, the rub is how do you know which company to invest in? And that's what this club is all about. So I'd like to take you to the first huge aspect, the first huge tool I want you guys to get used to, and this is Investopedia.com. This is probably one of the best resources for starting investors on what you can do. Right here, you can see across the ribbon, there's a ton of really great links. What investing right here, what I actually really like are the tutorials. So, I'll get to that later. And you go to tutorials and you see a whole line of all kinds of great subjects and everything to read up on about investing and finance and all those things. But what I want to direct your attention to is basically how you buy and sell stocks is you have some type of valuation model. Okay, and that's just a lot of gargly, fancy way of saying hey, I have some idea of how stocks end up getting priced. And I'm going to express this idea in so many words, and that's going to be my valuation model. This is how I think stocks are valued, so when I research stocks and scan for stocks, and I'll get into scanning for stocks later, this is how I think, this is how a stock's going to be priced. And so right now I want to introduce you to the two most basic ideas in all of stock investing. It's value and growth. And we're going to talk about this in the club soon, but basically just to give you some exposure to it, value means I'm going to look at what has happened in the past how much income it has, what assets it has, all this financial information. And then I'm going to compare it to its price and its peers on the market. I'm going to see how risky an investment it is. Is it going to go out of business? Does it have a lot of risks as far as, the sales next year might not be as good because it's in a really volatile market? All these factors, and then based off of that, I'm going to come up with, I think this stock is undervalued because right now it's selling for $12, but with the amount of risk, assets, and income it has compared to its peers, I think it actually is worth 14. And I think as time moves on, it's going to move closer to $14. So right now it's worth $12. So heck, boom, let's invest in it. I'm expecting to get $2 of profit. And, valuation, very specific models, like I made it sound easy, like, oh, there's some, sort of formula out there that very accurately predicts exactly what a stock price is going to be. Unfortunately, no, but there are a couple basic strategies. And we'll get into those later as we go through the year. And growth just means, hey, I'm going to just look at some of those aspects, income and assets, but I'm not going to care really about the value, the price or the risk or something like that. I'm going to care more about just how fast it's growing. If this is a new company or even just an old company that's revitalizing itself and it's getting a lot of press and, really the stock price is going up and, income's going up, great, that's the stock I'm going to invest in. And there's almost like a shadowy third, I consider it part of growth, and it's called technical analysis, which is saying, hey, I don't even know if I care about things like income or assets or things like that. I really care about growth of the stock price itself. So that's really looking very solely at the stock price and how much it's being bought and sold, and you use just a bunch of math and computer science behind it. And basically, there's a ton of different investing ideologies. Right here is a tutorial. Again, I just looked at tutorials and what do you know in Investopedia? Stock picking strategies. And we can go over this in the club and everything. Here you see value investing, growth investing, qualitative analysis, fundamental analysis. Really, again, all of these stem from value and growth. There's combination, growth at a reasonable price, and all kinds of different ways of looking at stocks and how they're valued and how we think they're going. And again, if you're really interested, I really recommend, perusing this at your leisure. And we'll talk about them more as the club goes on. But anyway, so you get some idea of what do I think best represents reality. Is it growth? Is it value? What do I understand better? There is no one right answer. A lot of the time people look at both, and a lot of the time people look at numerous aspects. But after a while, you get a sense of, this is how I think stocks are really valued at, and I'm going to perform this valuation. I'm going to choose stocks based off of that. And again, this is just a really high-level overview, so we'll get more into it later. And then once you do that, you're actually going to want to invest in stocks. And this is really important because this is the guinea pig we're going to use throughout the club all year long. So this is Investopedia still, but this is the stock simulator. So if you go to Investopedia's main page, stock simulator, you'll need to have an account. It's free. I really recommend signing up. Just also signing up just allows, creating an account and signing in allows you to keep track of what you've been reading and everything like that. Then you go to your stock simulator, you join a game. I just joined, a new game, the 2015 game. I haven't done anything in it. And basically, the stock simulator means that it gives you so much fake money. You start with, $250,000. And you actually can trade, you see over here, you actually can trade stocks with that fake money. And then the information in Investopedia is tied very directly into what's actually happening in the marketplace. So this is a way to practice investing without actually having to put your money on the line. And it's really good because you can see right here, for example, the stock market right now is closed because, I'm making this video quite late. But, it's very realistic. It says, hey, you want to buy a stock, it's currently closed. Also, as I said, it's a market. So just word of advice, when you see this, $635.44, that's a combination of buyers and sellers when it last traded at. But that doesn't mean that if you put an order in right now, you're going to get it for exactly $635.44. It means that that's a good estimate of what you're going to get it for. But when you place a buy, you are changing very marginally what the actual price is going to be in a market because you're creating more demand. But at the same time, people could be simultaneously selling. You might get a slightly better, slightly worse price. And again, in reality, if you see it's like this price and you say, I want to buy it, and, it executes, the market's open, you'll probably get it in, a couple of minutes, and it'll be very close to this price. But I'm just, letting you know how realistic this simulator can be. And then, you can trade. So right now you'd be buying, later you can sell. What I also really like about this is it lets you know how you're doing compared to everyone else. Like right now I'm 53,792nd place. Again, I haven't really, done anything with this. Start a new game. But again, and there's some links on the side, I believe. Yeah, stock market. This gives you some articles, things like that. Nice to look at. And again, so what do we have so far? Stock is partial ownership in a company. You want good cash flows. You do that by, buying it and hope it has an increase or, a good dividend. And how do you do that? Well, you find a valuation model that you think, and practice stock picking strategy. Now the valuation model, so that's the real sticker. How do I find something, and how do I know which valuation model to choose? And once I choose it, and I research it, how do I actually get the information necessary from the marketplace to know what how to actually perform these valuations? So understand what the valuation is, understand how to perform the valuation for the stock, and then scan for all, out of all the stocks in the stock market, how we're going to actually find the stocks we're looking for. So one of the first things I really recommend doing is always being plugged into the news. I like Bloomberg as a Bowler student, and I'm pretty sure anyone on campus who wants to, they can have access to the Wall Street Journal as well. I really like to stay plugged into the news here, and also this is like a really big link. I really recommend everyone does this. If you go to markets and go to economic calendar, it takes a second to load. Here are all of the different things this week that are big, that are being released. It could be for the federal government is releasing information, some private group is releasing information. Right here you can see, there's a GDP announcement on Friday, September 25th. And then, at 8:30, Friday, September 25th, you'll open this up, you'll see what it is. And what's really interesting to do sometime is to go and figure out, look at your stocks and look at the market as a whole and say, based off of this information, how is the stock market reacting to it? All of these things right here are normally pretty big market movers. So, that's what I really recommend. Staying plugged into the news, the markets. Also, currencies are big things to look at. As we go on, we'll try and say, okay, well, do we want to invest in foreign companies or not? There's actually a pretty clever argument saying, there's really no thing as investing in a domestic company anymore, just because, quite frankly, so many companies are invested in each other all across the world. But it's still good news to look at the currencies, if anything, to understand how your country's currency is doing compared to the rest of the world. which really gives you a good idea of how your country's economy is doing to the rest of the world. And then also with markets, there's commodities as well, something good to look at. You can see precious metals, gold. Right now it's $1,132 an ounce. When I started college just a couple years ago, it was $1,200 roughly per ounce. And as time goes on, seeing how much it goes up and down. And that's actually really big because gold is a really good standard of how afraid people are. Normally, when people are afraid of the market and they think things are going poorly, they'll get out of stocks and invest in gold. So if gold is going down, that normally, not always, normally means that people are expecting a good economy. So, there's all these correlations with all of these prices. So, again, just really stay plugged into everything. The news and what's happening on a macro level. Now, another really good thing to do is look at what's happening on a company-by-company level. And the biggest thing you can do is look at the financial statements first. There's a lot more you want to research about a company, but looking at the financial statements are big. Now, if anyone hasn't taken accounting yet, pretty much if you're a publicly traded company, again, you're on a stock market, which aka the companies we're looking at as investors, it is by law you have to release an annual report, and most of the time a lot of other reports to this United States Securities and Exchange Commission, if you're a United States company. If you're a United States company and publicly traded. So, and then all of these reports that go out, the biggest one that a ton of people look at is the annual report, because the annual report has the annual the annual financial statements and their notes. And in financial statements, if you haven't taken accounting yet, are just 4 really basic but really important statements that tell you how well a company has been performing. So, there's the income statement, which shows you, profit, loss, income. There's the balance sheet, which shows you, here's the balance of assets and liabilities and, ownership we have. Then there's, shareholders' equity and statement of cash flows, where our cash is going. And again, if you have taken accounting, there's a really good chance you've heard all of this and you know all of this. But when it comes to actually knowing where to find said information, that can be a little bit tricky. So this is one of the moments where I'm going to say, look at my computer and just look where I'm going. I just went to sec.gov. I'm going to follow this link right here, company filings. Then let's say I wanted to, know Google's, financial statements. GOOG is the ticker symbol. I'm going to search. These are all the filings that Google has sent into the SEC. Now I want their annual report, which is called a 10K. So just Control F, 10K. Here it is. Go to Documents. I just follow the first link right here. And what do you know? All 80 pages of just what's happening here. But you can see, this is really good information that about this business. You see right here, there's the financial statements and supplementary data. That just means notes to the financial statements. But there's also a lot of other really important aspects. You have management discussing, financial condition and risks and everything like that. You have, risk factors of the business. You have all kinds of other different aspects of the business that are all put into this annual report. Really important to know and really good stuff. And again, I know I'm throwing a lot at you now. Don't worry about it. But just as time goes on, you'll get to know this like the back of your hand. And again, if you seem a little bit lost, I just sort of like the idea of, let's throw a lot at people and then see what sticks and just go from there. Also, another really good resource, and this is the last one I'll show you, is Morningstar. So and that's actually like sort of a proprietary information kind of, like you have to actually, pay for this information normally, but, John Carroll, they, essentially have an account for you. So you go to John Carroll's website, And sorry about that. And what you'll want to do is go to John Carroll's website, go to the library, and search Morningstar. And if you're outside of the university, you're going to have to sign in. But then with Morningstar, what you want to do is, this is a really good resource. All information on indexes, sectors, and industries. We'll get into what those are later. And also what you can do is you can look up professional opinions and analysis about your company. So I'm going to search Google right here. And here you have a lot of the same information, 635, 44, all this kind of stuff, really good interactive charts. But also really important is you have, stock analysis, where professionals actually go in and talk about, what's happening. And you can also look at key ratios. I'll get into what ratios. And here, financials, valuation. This is really interesting. This shows you what people who actually own Google stock are doing with said Google stock that work for the company. Insiders. Does the CEO have a ton of stock? If so, is the CEO buying more or less? That might be a signal, is what we call that. But anyway, so again, just to recap here. So what we want to do is invest in a piece of a company. We want to know a couple valuation strategies, figure out which one we like, and then use it to come up with an investment ideology almost, where we say this is the kind of general things we're looking for. We want strong financials, or we want growth stocks. Really good upward changes in income and innovation. Then we might refine it by looking at some stock picking strategies, maybe finding some formula out there. There's a dime a dozen kind of formulas out there as far as, if you believe in this strategy, this is some sort of mathematical formula where you put these numbers in and it spits something back out at you. And we'll talk about those, the plus and minuses of that. And then, once you have that, you'll want to look at the economy as a whole, have a lot of information, start looking at companies. So what you'll want to do is, go to their 10Ks and look what other investors are saying about them. Is the general process. Now again, trust me, I know I threw a lot at you. Don't worry about it. We're going to go all over this, but I just sort of wanted to show you up front and close, hey, this is all the kind of stuff we're going to be looking at and doing. If it seems like a lot, don't worry, it is, but we're going to take it piece by piece and have everyone being Warren Buffett by the end of the year. But so I hope you had a great video. Time watching this video. I know, really exciting stuff. If you have any questions, feel free to email me, and have a great weekend, guys.